Today we had PPI numbers which sent gold to the moon as basically we had more cooling inflation numbers come out. And in this video, I'm going to be going over what that entails, what it could mean for stocks, forex, related currency pairs with the dollar in them, and the gold market itself. We'll take a look at all of that right now. So US producer prices fall the most in nearly 3 years. Producer prices for final demand in the US fell 0.5% month over month in March, the biggest decline since April of 2020. And if you guys remember about that time, we were going into the pandemic full force and there was a major slowdown. So it's a little bit concerning. But again, in terms of Federal Reserve and what it's going to do to the dollar, gold, and stock markets, we'll take a look at that closely in this video. 2/3 of the decline can be attributed to a 1% decrease in prices for goods, namely gasoline. Prices of services edged 0.3% lower, led by a fall in margins for machinery and vehicle wholesaling. Let's take a look at the charts. So to start things off, I do have to update you guys on my JPY trade. We are all out for a profit. We ended up riding this thing all the way from over here and rode this entire thing throughout all of the volatility through CPI. And with PPI numbers coming out today, we did in fact break to the downside. Now I was able to go ahead and lock in my profits before the price continued lower, which is making me feel pretty good about my decision to do so this morning. I just trailed stops prior to the news event and again, paying off big dividends right now that I did that. Anyways, this is a signal that was shared inside of our Discord channel. I'm continuing to watch GJ, but I am fully out of my trade myself. Again, entered around here and ended up closing for a profit here. We'll pop up on the screen now what the final result of the trade was. I believe we were somewhere around $400 in trailing stop profits. So a really nice move. For those of you guys who caught some of the GJ move, congratulations. That was a heck of a rally, and we'll see if we can find something else. Anyways, now we'll take a look at gold here this morning, which popped tremendously. If you guys are watching the gold market, like I said, it went crazy. And I want to, for those of you guys who are sort of newer to my channel, you will definitely recognize that I focus more heavily than maybe a lot of other channels on the fundamentals, what's really driving price. Because at the end of the day, price patterns do one thing or the other. But we were calling, this blue line was actually our target for gold here in the previous weeks. Why is that? Why were we bullish on this? Is it because a pretty pattern emerged on the chart? No. I mean, it was a nice technical chart, but beyond that, the main core reason is because, again, right now we have CPI and PPI came out this week, and both of these numbers hinted towards cooling inflation. Now, there are some things there that really we need to talk about. With CPI numbers coming out lower than expected, this shows what the Federal Reserve wants. They want inflation to crack. They want that target of 2%. We're currently sitting at 5%. Well, also today we got PPI numbers that came out, and this is producer price index, of course, showing spending in terms of or costs and spending associated with producers, which is of course on the business side of things. It's a really important inflation metric as well. This one came out lower than expected as well. Why then is this so bullish for the gold market? Well, again, it's because the US dollar was very bearish on this news, because when inflation is coming down cooler than expected, it is less likely that the Federal Reserve continues its campaign of rate hiking. Now, right now, we are sort of as a market consensus is that rate hikes will come to a slow and potentially a stop after this next meeting in May. And then from there, we're expecting, again, a pause to see how things go. And then perhaps some people are even saying that there will be a rate cut towards the end of 2023. All of this language, all this conversation lends towards a more bullish gold market as the dollar becomes less and less attractive. We have been bullish in the, if you've been watching the channel, you know I've been very bullish on the gold market, and seeing this break above 2030 is really cool. I don't have any current trades open on gold. I've caught this run up here previously. I have not been in this one, though I have been benefiting from the dollar weakness in other areas of the charts, other trades that I'm currently taking. So I don't have all my exposure to gold right now, but I am interested in looking for gold pullbacks. So let's mark this for what it is. We've got a support level potentially here at the 2030 mark. If price pulls back, I would love to see a little bit of a retracement from this previous low to the previous high. What you can see here is if you've got levels like the 38.2. If price gives us a pullback, I may have to nibble, take a little bite out of the gold pie, if you will. Looking for more upside there. If we can pull back to something like 2020, that is now sort of a pullback zone that I would potentially be interested in picking up a trade. We'll take a look at the factors here on the Edge Finder. I was looking at the euro. You can see it's pretty neutral here. Don't really have much of a bias there, but I'll show you where I do have bias. We'll take a look at the gold chart here and see what's going on with gold. And again, we continue to be bullish. We have a +3 score on the gold market. Let's take a look at the reason why. Institutional money is 78.95% long as of the most recent reporting. This takes what this data shows us from the Edge Finder. It takes in all the contracts being traded according to the CFTC's COT report, and it shows where institutions are buying and selling. And we see heavy buying on the gold side of things. There's a lot of long exposure there. They're betting gold is going higher. Knowing that the big boys and big girls, I don't know if that's okay to say, you're canceled. The big boys are going long is, of course, a positive factor to the upside, at least in our view. But then when it comes to retail sentiment is also very curious because you've got 74% of retail positioning to the short side. We are counterbalancing these two things. We're taking a look at them very closely, and that is part of the reason why we are long biased. Smart money is long, and dumb money, for lack of a better term, is short. And so we are looking at that from a bullish perspective. We like gold on a pullback. And when I say we, there are a couple of us here at A1 Trading. We trade together inside of the Discord channel, and we've been looking for, Frank and I have been looking especially for gold longs on pullbacks. So I do like gold if we do get a chance to get long on that. And yeah, that's something I'm watching for. By the way, guys, the software that I'm looking at, it is called the A1 Edge Finder. It is a software tool built by my company called A1 Trading. We are a software company in Atlanta, Georgia. We build tools for traders. If that's something you're interested in getting access to, if you've been watching the channel for a while, do not miss our biggest sale of the entire year. We are currently doing 40% off if you use the link and promo code down below in the description. But a little secret for you guys, if you're looking for a bigger discount, literally the best discount we have ever done on the Edge Finder ever to celebrate 1 year of developing the software, if you head to this link, it's going to be in the description. You can click that link and click chat now. If you click tell me about your discounts, it'll open up a conversation with one of our support representatives here who can train you with the software tool, show you how it works, walk you around the tool, that sort of thing, answer your questions, and get you access for the biggest discount we've ever done ever. And I'm not kidding about that. We will probably never do a price discount bigger than the one that we're doing right now. So take advantage, don't miss it. And again, we'll continue to update the tool and go through more features basically off of the funds that we raise. This is how we built the tool. We've raised funds by offering it at discounted rates to people. And then with that funds, we're able to invest it into the development of more features. That is really how we've been able to build such an incredible product. It's been, in some ways, community funded in that way. So again, in terms of bank, smart money positioning here, we mentioned the COT briefly. Using the COT reports, we track things like gold, we track oil, we track the euro, the dollar, everything, right? So we take a look at all these things and we see that gold here consistently, or at least recently, has showed a very large long position from institutional traders. Again, we mentioned that 79% ratio. But if we want to go further, if we want to go more in detail, take a look at the gold specific window, and you can see we've covered this recently, 266,000 long contracts, 71,000 short contracts. There's a clear, distinct preference for the long side from big money, and we're continuing to watch that. Take a look at retail sentiment in detail. You guys feel free to pause the video if you want to take a look at your favorite pairs. If we take a look at indices, we'll take a look at indices in a second. The gold chart here, 76% short from retail traders, very, very notable. Feel free to pause the video if you want to look at other ones. I'm going to go ahead and look at the indices as well, which I find very, very interesting considering retail traders are very short exposed when it comes to indices. I am currently long an indice. I'll go over my trade right now. We'll take a look at SPX 500. And I'm long. I've been long S&P 500. I think that this inflation cooling stuff has the potential to find some upside on the stock market, if nothing for the short term. This is what the Federal Reserve has been looking for. I think that they have potentially cracked inflation. We'll see if I prove to be right or wrong about that. But it's been looking really good, and I think that it has upside to go. So I am currently long S&P 500. Let me show you that trade. So I am currently long. It's not a big trade. I'm only up $175, $180, just about break even on this trade. What I'm looking for is a break above the previous highs. If we get something like that, I'll look to trail stops and lock in more. If this occurs, if we can squeeze up to something like 4,200, I'll be in a really good position with profit. And if this market breaks through 40.60, I will be out of the trade and take my loss as a controlled small loss. So that's where I'm at with the S&P 500. I continue to watch this chart as well. Let's see what else we can find in terms of other USD related currencies. First, let's take a look at the dollar, and you can see dollar is just tanking today, breaking through the lows and causing a lot of upside for things like euro dollar, right? Pound USD. Both of these I'm not necessarily bullish on, but I can understand the bullish perspective from a technical perspective. You know, the chart looks really good. The pound dollar appreciating massively off of this dollar weakness, breaking through the previous highs here. And actually, you know, something like this could actually even look like an opportunity. Now, I personally do not like pound USD. I don't have any trades or willingness to take this trade, as I don't have any bias from the edge finder. If you guys are, again, I keep talking about it because it is something I genuinely use in my trading every day. And so, you know, if it's not on this list, usually it's not going to be something I'm really interested in trading. That's part of the reason. If you take a look at the two currencies, the currency pair GJ that I was trading, as well as the S&P 500 long trade that I have, both of these are quoted as potential buy biased trades. Now, what I then do is I use the technical analysis. You know, I'm looking for pullbacks and nice trends and stuff like that. But I'm looking for confirmation on the fundamental and sentiment analysis from the edge finder, which is why both of the trades that I'm in, GJ and S&P, I found them was because of the edge finder. So that is kind of where I'm at with that. Going forward, like I said, I'm no longer in the GJ trade, may look to re-enter, but I also like things like euro yen as well. So if I'm looking to get exposure to yen crosses, I really like things like euro JPY, possible pullbacks. You can see my chart is already marked up for this. So if we get a pullback to like 145.223, something in that area looks good for continuation plays. And in terms of GJ, again, I just mentioned, I just closed out of a profitable trade and price is now giving me a pretty sizable pullback. So it is a question of, do I want to get back into a trade like 165.45? I may have to take a closer look and see how the candles line up on the lower time frames. But if I do take that trade, again, I went long here, closed out here. So I'm feeling really good about my decision to go ahead and trail my stop out. And again, made good profit on that one. So we'll see if we can catch another trade. If I do take that trade, you guys will see it inside of the Discord channel. And if you're not inside the Discord channel, here is a little preview of what it looks like. So inside of the group, I share all of my trade alerts. So if I'm long GJ, if I'm trading S&P, whatever I'm doing, I share it here. It is not financial advice. It is purely what I am doing with full explanations and reasoning and that sort of thing. If that's something that you would like to see, you can subscribe to our VIP group using the links down below in the description. Or again, you can chat with us on our website and ask about discounts. Again, we're doing our massive sale right now. Happy trading. Thanks for coming back, and maybe we'll see you back tomorrow for another video. Thanks for watching. Hey, guess what? I just found a video made just for you. Click this video to help with your trading, and thanks for watching.